All right, cool beans. Cool beans, everybody. All right, so for the midweek technicals, we're looking at the dollar. Looking at Tuesday's daily range. We had a bullish daily range Tuesday. So today we were expecting price to pull back down into our discount array. Um, Let me get my chart for 1 second. All right. So we got our pull down to the PD array, to the discount array, and we pushed down to run sell side liquidity. We closed today above the bottom level of the discount array. So what I would like to see for the rest of Asian markets and going into London markets is if we can get above the upper PD level from Thursday. I'm sorry, from yesterday, from Tuesday. Um, and then I also want to see my new level from today's daily range. Um, so so with today's daily range, I'm wanting to see price action pull back up into the premium array for today. Like I said, paying attention to see if we get above that upper discount level from Tuesday's price range. And if we do on lower time frames and we push above that aggressively, then that's more confirmation that we're coming up into today's premium array. And I want to see that happen going into London markets. And when we get to London markets, we should see price action give us something concrete as to where we can make a definitive decision on where the algorithm is going to be pushing price. So yeah, that's what I got for midweek technicals for the dollar. Let's see if we get that pullback up into the premium array by London. Let me see one more thing before I go to, yeah. All right. All right. Okay, yeah. All right. So yeah, that's what I'm looking at for the dollar going forward for the rest of the week. Well, not for the rest of the week, just going up into London. And then we'll see how London opens up off of these levels if we get to these levels. If we don't get to these levels, If price action starts to push to the downside, then we want to see where we're at when London opens and see if we look to run today's sell side liquidity at 101.019, right? So moving on to currencies, Euro, USD. Yesterday was a bearish day. We have our daily range here. So as opposed to the dollar, we know we inversely correlate with the dollar, so we push in the opposite direction of the dollar with currencies. So we were expecting us to pull back up into today's premium array. And we did run yesterday's buy side liquidity, and price did close below yesterday's upper PD PD level. So let's see where we close Asian markets going into London markets. If you haven't already marked your daily range for today, I mean, you can wait till after midnight to see if we do set a higher high or a lower low before midnight, but you can go ahead and set those levels now. And if we do set a new higher high, lower low, you can just adjust it. But if Euro is going to keep this upward trend going, we're going to have to see a pull back down into a discount level first, because we got to get short in order to go long, and we got to go long in order to get short. So that's what we're going to be looking at for Euro going forward. See if we get a pullback down into today's discount levels. And if not, then we will be looking to run today's buy side liquidity. So you know how it go. Let me see something. Internet don't fail me now. So that's what I got for currencies. All right, so there go Amir coming up in the house. All right, so yeah, hold on, sorry. Should not $4 million. There we go. Let's see if we get that pullback from metals up into the premium levels, premium array. Yeah, I'm not going. I'm honest. Start. Here we go. Oh no, my internet cutting up, y'all. All right, there we go. So let's see if we get that pulled back up into the premium levels for metals. And we just hit this fair value gap, daily fair value gap that I had marked here. We came down into that today. And I'm expecting us to pull back up into a premium level, premium array. And then examine price when we get there to see how price reacts to those levels. However, if we fall down below this lower level of this daily fair value gap throughout Asian markets tonight going into London, then I'll be expecting us to push on down to this lower daily fair value gap that you see right here. And this is the overall objective. So, so this pullback for the dollar up into this premium array might be enough to push us down to this daily fair value gap on US 500. So we'll see. But yeah, we should see a pullback up into here if we're going to get down into that fair value gap. We don't have to now, of course. We don't have to see a pullback. We may reach for it and not even get to it, but that's what I want to see. So yeah, that's what I got for futures. And Bitcoin got back up to 30,000 again today. Well, yesterday. Well, yeah, today, I'm sorry, yeah, Wednesday. And pulled back off of it. So let's see if we can break back above 30,000 before we start. Well, first, hit the next buy side liquidity at 31.7 and then start filling in this imbalance that we see right here. But we got to get back above 30,000 first before we can consider that. And then if we break back below, you already know we'll be coming back down to this fair value gap. So moving on to Ethereum, if my internet will act right for me. Minute, guys. It's the internet. All right, so looking at Ethereum, we're back up at the fair value gap that we broke back down through after we broke back down through 2000. So let's see if we can push back up above there, get back above 2000. I'm gonna leave that right there. Because if we don't break back above this level, then we may come back down to play up in here a little bit more to see if we got enough support here to get back up above it. But let's just see what we get throughout the rest of the night. And for London going into New York for crypto. 8. You know, we got to get back above 420 first, or 430 up in here. You know what? Yeah, let's see if we can get back above this market structure. We do got this fair value gap right here. I really want, you know, when we get above here, it's a new sheriff in town. Yeah, about the same price level though, 440. So we can get above this fair value gap, then we can get above 480 and get on back up in the 580 area to get to our ultimate goal to break these equal highs right here around 630. Our next level will be around $7.70. And then next level will be $10. So let's see. And that will bring the midweek technicals to an end. So I'll go ahead and pass it over to Carmen so she can get started with the midweek fundamentals. It's all yours, Carmen. Give me 1 second. All right, it's all yours, Carmen.
Cool. Hey, everybody. All right. So, today we are going to talk about some of the earnings that came out today, yesterday, and just kind of put it all together with the overall economy. So one thing I will say is that times like this for me are kind of fun because people who don't understand that a stock's price does not determine its value, they're out here now looking at stocks based on price. And you have to remember, you have to remember that for the last, if you don't want to count all the humps and bumps in between, the last 15, 16 years or so, we've been in a very technical bull market. So at some point in time, all good things must come to an end, or at least a pause anyway. And people are out here now, like companies like Chipotle, for instance. Chipotle stock is they just reported earnings, so it might be a little over 1,800 or right at it now. They're like, oh, that's expensive. When you do the numbers and kind of crunch it down, Chipotle did not do what a lot of the other companies out there did. And Chipotle has a lot more room for growth and expansion, which is why I think it's kind of funny now. You have people out here kind of sifting through, trying to figure out the economy based on all these teeny tiny metrics, but you can't look at things individually. You have to literally kind of take it all in and put the pieces of the puzzle together. So I'm going to start yesterday. Actually, no, I went too far. I'm going to go back to Monday because I just want to like bring home a point. And I'm not going to read out the revenue or what the earnings per share were. I'm just going to tell you if they made it, like if they beat earnings, which means they met or exceeded their expectations, or if they missed, which means they didn't. All right, Coca-Cola beat earnings. Dynex, that one, I don't know why, for some reason, I didn't write that one down. First Republic Bank, man, they're just getting crushed. I don't even want to talk about them. They're just kind of dragging down the whole financial sector right now, though. If you want to look into that situation, you can. Whirlpool beat earnings. GE beat earnings. UPS missed earnings. And UPS, so out of all of the shipping companies and out of all the companies who do some type of freight transport, UPS has actually been doing pretty bad. Their stock was down. If you just want to look at stock and not overall value, their stock was down like 10% yesterday. Dow, the chemical company, beat earnings. Spotify missed earnings. PepsiCo beat earnings. GM beat earnings. 3M beat earnings. Halliburton beat earnings. Raytheon beat earnings. Biogen beat earnings. McDonald's beat earnings. JetBlue beat earnings. Alphabet, aka Google, beat earnings. And I'm going to come back and say something about them in a second to kind of drive this point home. Texas Instruments missed. Visa beat. Microsoft beat. Chipotle beat. Illumina beat. Thermo Fisher Scientific missed. Hilton, they reported earnings today and they beat. Humana, who most people know as like providing healthcare services and insurance and such, missed earnings. ADP, you know, ADP from when we look at the Forex Factory calendar, they beat earnings. General Dynamic beat earnings. Boeing missed earnings, which is kind of funny because they're technically kind of sort of in the same sector. Hess Energy Company beat earnings. Norfolk Southern beat earnings. eBay beat earnings. Teladoc beat earnings. Roku beat earnings. Pioneer Natural Resources beat earnings. Meta, aka Facebook, beat earnings. ServiceNow beat earnings. And then Waste Management, I need to collect data on that. But they probably beat earnings. So what you heard me say a lot was they beat earnings. Don't let beating earnings like make you think these companies are like doing good. A lot of the companies though, I have to preface that. In times of inflation, when companies can raise prices, that the first 2 to 3 quarters might look amazing, like, oh man, they're beating earnings. Well, when you keep raising prices and you're able to keep your raw materials cost flat, because remember, most of the companies that I just named to you provide a product. Some of them are services, but most of them provide a product. When you are a company, you don't buy your products that you're going to need for the next day, the day before. Like, you're trying to think long term about your costs. That's what the whole futures market is about. That's what the futures market is for. When you go and you look at the price of corn and sugar and chocolate and hogs and wheat and everything else, like, you have to think in your head, farmers are producing crops or have cattle that go to the market. Then you have buyers on the other side, typically government contractors or the government itself and corporations buying these huge orders, contract sizes worth of futures, commodities. Because let's see, one of the companies. Okay, let's just go with Apple. Apple's easy. The metal that is needed to make an iPhone is not purchased in April for May or in May for June. It was purchased like last summer, and it gets purchased at a far enough distance out. Typically, I'll put it to you like this. Typically, when the new futures contracts roll out, they're buying, or they're looking to buy, or they're looking to sell what they have and make a profit. And then you'll hear, oh, there's a supply shortage. No, it's not a supply shortage. They were just trying to make money off of what they already had based on prices in the futures market. And then now they're trying to buy in back at a lower price. That's why markets are also cyclical. But anyway, so the whole futures market is about corporations doing this long-term planning. So Apple bought metal for their iPhone last year. So they bought it last year. Let's just say they bought gold for their semiconductors at $1,500 a troy ounce. Okay, well, even if the price of gold rises or falls between then and now, they still bought it at $1,500. So let's say the price of gold goes up, which it has gone up. Okay, they can either choose to sell some of the gold they bought at a lower price, or their prices can continue to track inflation higher. And when price goes higher, guess what? That gold they bought at $1,500 a troy ounce is still $1,500 a troy ounce, even though at that time iPhone might have been $700. Now an iPhone might be $1,000. So you're looking at that $300 price increase. Okay, there's a $300 price increase there, But there's also the fact that their raw materials costs stayed flat. So they're making even more money. So when you're looking at these earnings prices, and it's like, or these earnings numbers, and it's like, man, they really beat. Did they? Like, look at the company, look at what they do. Like, that's part of the whole, like, researching and trying to figure out stocks and their industry, what they provide, who their competitors are. Because when you're able to see, like, okay, well, Spotify missed. Well, what did Spotify do different? Well, if Spotify didn't do anything different, then that can lead you to say, okay, well, it was the consumer mindset that changed over time. How so? Because if Spotify didn't change its pricing, they didn't change anything super crazy with their platform, no one got into any kind of crazy trouble, you can then assume that, okay, now we have, you can assume that now we have customers that are falling off the platform. People are trying to save money. So when you're talking about recessions, when you're talking about job cuts, when you're talking about those kinds of things in the economy, that's how you can kind of start to put all of this information together. And another way, we talked like way way back about indicators of a recession. But Google, I said I was coming back to Google because Google did one of them. Google actually did a stock buy. Sorry, I thought I was going to sneeze. Google did a stock buyback. So what that is whenever they have outstanding stock shares out on the marketplace, if not so much that they might feel that they have too many shares out on the market, but if you want to dry things up a little bit, aka if you want to artificially temporarily increase your stock price, what can you do? You can buy back shares. Also, in times when you are possibly going to be going into a recession, you see corporate staff selling off their shares within their own company, and then you tend to see companies do stock buybacks. And why? Because you have consumers offloading shares into the marketplace. That is going to artificially drop your stock price. So stock prices fluctuates based on like supply and demand and just algorithmic movements within the market. All right, so when you are looking at a stock price, and let's say someone dumps 100,000 shares into the market, you're going to see that stock price come down and you're going to think, oh, what's wrong with this company? There's nothing wrong with the company. The company can be perfectly a-okay. However, it's just someone who needs the money. They need liquidity, so they sell their shares. A company is going to go in and buy up shares because you have to do a few things. If you are a sector leader, like the FANG stocks, like Facebook, Apple, Amazon, Netflix, Google, you have to make sure that even though we call them competitors, they're actually like, they're more like best friends. So you have to make sure that your stock price is still reflective of you being a solid company. So you're going to go back and you're going to buy up your shares. This also does something on the flip side. So when things get good, because this is a win-win for a company. So when you buy up your shares, you help to maintain or slightly inflate your stock price during a time of recession, economic slowdown. Now, when things get better and you're actually able to put your money into more things that are going to help your company expand, companies And when money becomes cheaper, because you tend to lower interest rates during that time, you can then do a stock split, or you can then put those shares back out into the marketplace. Then when you do things like that, that encourages people to buy your stock. So companies have different ways of kind of playing this. So while yes, I would actually say, because there were more earnings than what I said. I only went through and read off of the solid, the most well-known companies, the companies that people would know their brand. And that's very important as well. I just went through and read those because to me, those are the most important during times like this. Coca-Cola, Apple, Visa, Boeing, Halliburton, companies like that have more presence outside of the United States. They have more brand recognition. So you're just able to do more with companies like that. Then the companies that have brand recognition within the United States, it helps because those are brands that are in everybody's face all the time. You can't turn on the TV 24 hours without hearing an insurance commercial, without seeing some type of fast food or soda commercial, just some type of advertising that pertains to one of those brands that I just talked about. If you throw away trash at any point in time during your day, Waste Management has their hands on it, whether it's home, work, outside of a store, wherever. So those companies that I named, most of them, for the most part, beat earnings, and they beat earnings on their own merit. It's not like they beat earnings and it was because they did something super crazy with their pricing. They didn't. You can go through, look at the numbers for a company and just kind of sift through and sort it out. We do have more earnings, more interesting earnings coming out for the rest of this week. And while I pull that up, I'm just going to pull up the Forex Factory calendar really quick. I am not going to read this to you guys because you know how to read. I'm just going to highlight a couple of things. Tomorrow, GDP comes out for the United States. We also have pending home sales coming out as well. So those will be items to pay attention to and to just make sure that you are aware of. And then Friday, this is mostly for Euro, but we do have preliminary CPI news coming out. Bank of Japan has news coming out, and then we have core PCE and employment cost index for the United States coming out. I care about all those things. However, if you are not buckled up and prepared for next week, then shame on you, because next week is going to be, man, if you could see me now, I'm like stretching my neck. Next week is going to be crazy. All right, so we start the week off with ISM manufacturing. Then we have JOLTS jobs on Tuesday. Wednesday, we have ADP, that same ADP that I just mentioned had earnings. Yeah, that ADP has non-farm. We have ISM services. We have Fed news on Wednesday. And guess what? It's also NFP. The two biggest news items that could possibly come out in the economy, guess what? Come out in the same week, 2 days apart. So yeah, if you're not ready for next week, then I don't know how to tell you to get ready for next week, because I don't know. But anyway, as far as earnings are concerned, I have it pulled up now. To finish off to finish off this week, we have American Airlines. Well, actually, this is tomorrow. American Airlines, Amazon, Caterpillar, Intel, Eli Lilly, Snap, Valero, Cloudflare, Southwest, First Solar, MasterCard, US Steel, Crocs, Pinterest, Gilead, Abby. Oh, so it's a lot of pharmaceuticals tomorrow. Merck, Amgen, and then Friday we have ExxonMobil, Chevron, Colgate, Charter, and Gentex. So I'm telling you this, and I am I'll start covering earnings a little bit more, or at least who's going to be reporting earnings, so that you know. But I am purposefully for this week, because when you think about companies that Congress summons to come testify and talk, a lot of them had earnings come out this week, or will have earnings come out this week. When you talk about the largest employers in the United States and some of the largest tech employers, they had earnings come out this week. Sorry. Whenever you talk about the largest companies that have consumer staples in the United States, they had earnings come out this week. So because they had earnings come out this week, and then next week we have all of the job numbers, not just one, not just two, which we would typically get on an NFP week. We have all three, and a Fed day with interest rates coming out next week. Again, if you are not prepared for next week, I highly suggest that you take some time, since you shouldn't be trading anymore for the rest of the week, unless you just, that's your thing. And just really, really, really like pay attention to your charts. Like, I want you to go through and have an idea for what you want your trading ish week. I say ish week because, you know, Tuesday things are going to start looking kind of iffy in the market. So if you want to trade next week, I would say Monday. Okay. Actually, let me go back. I would say if you want to trade next week, look at how Friday is in the market, because we're month. We're getting ready to do this whole, like, you know, changeover out of the first month of the quarter. Sorry, I got distracted. I had earnings scrolling across the TV. We're at the end of the month. We have all of these things coming up, like Fed news, NFP, and with NFP and with Fed news the week before, anyway, the market tends to kind of slow down. So look at how the volume is in the market. See if people are just really anxious to get out, which means you're just going to look at volume and just kind of look to see. If people are just kind of holding, waiting to see, you won't see a lot of volume increase. Volume would just kind of be flat, really low, really flat. And then Monday, you can take all of that information into your trading week and then just decide how you want to trade. Me personally, I will probably trade Monday and Tuesday. Definitely not touching the market after Tuesday at like 1 o'clock in the afternoon. Just me personally. Just because the rest of the week is just way too heavy to just play around in the market, because Fed news in and of itself is going to cause a lot of volatility. And then you only have one recovery day. You only have one recovery day before NFP. So anyway, just wanted to put that out there. So you guys will have that information. Friday, We'll talk about the rest of the earnings that came out and just see what some of these companies have in store, what their potential recession plan is. If anyone else is planning to do any type of buybacks, slow expansion, do some changes to some benefits and stuff like that. So we'll have all of that news coming out Friday. So we'll talk about all of that, but I'm going to go ahead and turn it back over to Mr. Levels. He's host now. So thanks for listening.
Cool beans, cool beans. Well, I'll stop the recording. That'll bring us to an end of the midweek fundamental and technical analysis. So I'll start the recording and take any questions.